Hey there, this is Coin Doctor with another in our series, Mastering Cryptocurrencies, Storage, and the 5 Degrees of Separation. Storing cryptocurrencies we've already discussed in another one of our videos. It's really important that we store our cryptocurrencies as safely as possible. Storing them on an exchange, even one of the higher regarded exchanges like Binance, is potentially a problem because wallets can get locked up, hacks can occur. Storing them in a web wallet is better. Storing them on a desktop wallet, especially if that PC is offline, is even better. And finally, a hardware wallet may be the best solution, but it doesn't work for every coin. The bottom line is you need to store your coins in the most secure location possible. However, sometimes, if we're going to be managing our portfolio, we need to consider selling coins. We need to consider taking profits because the bottom line here is protecting our investment and managing risk. This is easy to do when the market is going up, but when the market is sideways or down, we don't want to panic sell. We never want to lose sleep over having too much skin in the game. We want to take profits periodically along the way. Whatever your strategy may be, when it's time to take profits, it's time to manage your 5 degrees of separation. Cashing out of cryptocurrencies is not quick. When the market is going down, there's often higher traffic. Higher traffic on the network means slower transfers or more expensive transfers. Exchanges can go down, or they can put wallets into maintenance. Those wallets can be in maintenance for days or weeks, making it impossible to move your coins out of or through that exchange. Trying to do all of these steps rapidly in a volatile market will cut into profits. You want to be able to do it on your own terms, on your own time frame, systemically and mechanically. So when it's time to convert a higher risk coin into a lower risk coin, or cash out that lower risk coin when nearing a profit target, you need to know your degree of separation, how many steps it takes to go from that particular position to cash. This will help you be prepared to cash out easier also if there's volatility or if you're near a profit target. Finally, trimming profits in 4 coins. If you need to do this all at once and you're in a rush, could take 14 or more consecutive, successive manual steps, each one of which you could create a near fatal error by sending the wrong coins to the wrong wallet. You want to do this on your own terms when you're not in a rush, so you don't feel like you ever have to panic sell. So let's look at this process. Say you have your coins stored on a hardware wallet or an offline desktop wallet, which is the ideal way to store them in a cold manner. That's fantastic. But let's say you need to turn this into cash, and it's time to do so right now. Here are the 5 degrees of separation between you, your coins, and your bank account. First, you have to move the coins from your cold storage to your exchange. And then while you're at that exchange, you're going to have to convert those coins, in this case we'll use Walton as an example, over to something like Ethereum or Bitcoin, which is a more universal coin for the next step. Then that Ethereum is going to have to be transferred to your fiat exchange. This is the exchange, Coinbase or GDAX. There are many other exchanges that deal directly with your bank and deal directly with your home currency. Again, we'll use GDAX here as our example. So we have another step. We are now 3 manual steps from hardware wallet to exchange, conversion at the exchange level, then transfer to your fiat exchange. Then at that point, you have to take that currency and then sell it for cash, and the cash will appear in your balance. Then you have to do a transfer from that cash account to your home bank, which could take a few days. So if you need a bunch of cash fast, there's no way you're going to get it from cryptocurrency that you stored on your private wallet. It just can't happen. There's too many steps. And something can go wrong at any of these steps. So if you try to do these when you're in a rush, you're going to make mistakes. Or you could hit a roadblock along the way. So the point is, when you need cash in your wallet, you want to be prepared. And you want to lessen the number of degrees of separation between your cold wallet and your real cash containing wallet. So here is my chart of degrees of separation. 5 degrees of separation is as far as you can be. That is what we just illustrated on the last slide. where we have coins going from cold storage to exchange, conversion, another fiat exchange, conversion, and then to your bank. 4 degrees of separation is a little bit better. This is when you have coins that you own that are not directly convertible to fiat, like the example we used with Walton, that are stored directly on an exchange. However, there are security risks and wallet closures you need to worry about. Your hardware wallet will never close, but wallets on exchanges can, and that prevents you from moving it. So you see, this takes out one step. We can remove another step in these other cases. You can take coins that are convertible to your fiat, which are stored in a private wallet, and go and bypass the exchange like Binance and go straight to Coinbase or GDEX. That would be coins in your private wallet that are Bitcoin, Litecoin, Bitcoin Cash, or Ethereum. So you bypass the Binance step in that case, but only for those 4 coins. Also, if you have those coins on a trading exchange like Binance, maybe you're thinking about buying some more Walton, but you change your mind and you want to take your base Ethereum and cash out, it's the same number of steps. Of course, this second step 3, where your coins are stored on an exchange, is less safe. Finally, 2 degrees of separation is when you have coins that are convertible to fiat. In this case, if you're using Coinbase or GDEX, sitting on the fiat exchange. So Ethereum, Bitcoin, Bitcoin Cash, Litecoin, that's sitting in your GDEX account is only 2 steps away from getting to your bank. You have to convert it and then send it to your bank. Finally, if you just have cash sitting on the exchange, it's only 1 step away. You just have to wait for the transfer. Also, at step 1 here, you don't have the volatility risks of being in crypto. Just because you're at step 2 and you happen to own Ethereum or Bitcoin, which may be considered a less volatile cryptocurrency than, say, Smart Cash, which you might have held at the step 5 level in your private wallet, still you're in the crypto space when you're at level 2. You are out of the crypto space at level 1. And then finally, level 0, of course, is cash in your bank account. So how do we keep track? Say you have a portfolio spreadsheet. You should really add a column for degree of separation. Put the number 5, 4, 3, 2, whatever it is, so you know how much money you have that is each degree of separation away. So you know the speed and the complexity of cashing out at any point in time. When you're nearing a profit target, move the coins that you wish to sell, that portion of that portfolio that has risen up in value that you wish to sell, go on ahead and move them to an exchange. They're not going to be there long. And set maybe a limit sell order above the market. Maybe your coins will sell for you at a fantastic price in the middle of the night. Maybe you'll top ticket while you're asleep, and then you can continue the rest of the process to convert to cash. You only want to do this, though, when the market is rising, and we suggest in our other videos that you look at the greater coin market cap. If the market is falling, you probably want to complete all the steps at once. When you see increasing volatility and you are concerned and you want to have less skin in the game, you need to move a coin 3 degrees from your private wallet all the way to, say, Ethereum or Bitcoin sitting on your fiat exchange. That still gives you skin in the game for crypto. You're still going to have some of that volatility, but if you do decide it's time to cash out, you can cash out immediately. And that is a big help, because you never want to try to panic sell an altcoin straight from your private wallet. It's too many steps, there's too many problems that can occur. Not that you should ever panic sell. Now, one other thing you want to consider is taxes. If anytime you do a coin conversion, that is a potentially taxable event, so you would have to pay short-term gains tax on that. So you want to consider, if you have a coin that you've held for 11 months, converting that coin to Ethereum, say, and then deciding, I don't want to get out, and converting back, you would be subject to the short-term capital gains. So do keep that in mind. Typically, in our accounts, we assume everything's going to be a short-term capital gain. We couldn't fathom holding the exact same thing for a year untouched. So anyway, thanks for watching. Check out our other videos on trading and portfolio management. Of course, cryptocurrency investing and trading carries a significant amount of risk. You could lose all your entire investment. Fast Crypto Coins is not a registered investment advisor. This content is for educational purposes only and does not constitute investment advice. nor should the discussion of any coin be considered a trade recommendation. You must do your own homework from multiple sources regarding any cryptocurrency investment. Please note the date of this video, since the cryptocurrency environment can change rapidly without notice, and elements of this video may be extremely time sensitive. This video is considered current only for the day it was posted. This is Coin Doctor again. Thanks for watching. Have a great day.